Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to update you all on a level we had on our chart from the last video we did about a month ago on the longer term position of the US market, in particular looking at the longer term position of the ES. But before we get to the chart, we have to look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, let's go back in time a little bit and update you on the chart we had from about a month ago. So what we were saying was, this is a daily chart of the ES, the US stock market. So what we were saying was, if this high here back in June was taken out, then we would more than likely get a rally to above the previous high back in February, back here, and then more than likely up into the next decision point resistance area. In other words, we placed this area, this resistance area on our chart a month ago, saying that if the market carried on rallying, then this was an area to anticipate a reversal, or to look to see whether the market is going to make a reversal at this particular area. So let's now turn training mode off and see what happened. And lo and behold, the market did indeed carry on to rally, but look where the market reversed yesterday, just before yesterday's sharp fall. In other words, it carried on rallying up to hit our DP decision point resistance area before the sharp fall yesterday. So in other words, the sharp fall yesterday came as no surprise. You were prepared in advance over a month ago, ready for this zone off which this sharp reversal occurred. So this is what MTPredictor is all about. It's about having areas on our chart in advance. In other words, we're looking to work ahead of the market to anticipate areas of support and resistance where markets are likely to make reversals. And as you can see, that prepared you beautifully before yesterday's sharp fall. On the shorter term charts, there weren't any sell setups on the ES, but there was a very nice sell setup, a VS sell setup on the 3-minute YM that came in right at the high there. So if I right mouse click and put the analysis on, that would have got you in a short trade. As the particularly the ES was coming in at major resistance on a daily chart, the more aggressive traders among you could have looked to run this a bit further, maybe using our ATR stop down into that point there. You see our ATR stop is our red dots. If you had have done that, that would have increased the profit up to approximately 14 times the initial risk. If you had have been even more aggressive and looked to come in at the next DP support zone off the higher time frame chart, the 15-minute chart, you can see I have it on the chart there already. That would have then allowed you to run the trade down into a lower levels for, well, a very, very nice trade indeed. That would have been an absolute massive trade. But either way, you would have actually been in short on a 3-minute chart, and then you would have had to make the decision on how best to manage the trade, whether to use our ATR stop or the next major 15-minute support zone. Either way, it would have been a very, very nice short trade yesterday that would have caught the sharp fall. But the main reason for doing this video was basically to update you on how the market has unfolded in the last month since our last posting on this longer term position of the ES. And as you can see, the market has indeed done exactly what we anticipated. In other words, a rally, but not only that, continued to rally above the previous high back in February, but then made the reversal, but not just anywhere, reversed right at our typical DP resistance zone again that we had on our chart and preparing you in advance over a month ago. So yesterday's sharp fall shouldn't have come as any surprise to anybody.